I'm very famous for saying never sell your Bitcoin, and that's why the internet went crazy when we said we might sell it. If I was being more precise, I'd say never be a net seller of Bitcoin. It just wouldn't have been so viral or so catchy to say never be a net seller of Bitcoin. I think that in these periods, even if we were to sell one Bitcoin, we'd be buying 10 to 20 more Bitcoin. So you're really talking about a situation where we buy 10 Bitcoin, sell 1 Bitcoin, buy 9 net Bitcoin, and continue to accrete Bitcoin. The company, as long as it grows, is going to buy more Bitcoin than it sells. I expect we'll be a net buyer of Bitcoin in every month and every quarter, going on forever.
During its Q1 2026 earnings call, Strategy revealed it may sell Bitcoin to fund dividends on its preferred stock STRC and optimize capital. This raised a lot of suspicion in the Bitcoin and crypto space, largely because of Michael Saylor's popular catchphrase, "Never sell your Bitcoin." Many called Saylor out for the perceived hypocrisy, noting that for the past 5 years, he has urged Bitcoin holders to hold on tightly to their Bitcoin and never consider selling. One ex-user reminded everyone that Saylor had lost $6 billion in a day back in 2000 and is following the path that will lead to an even bigger loss. Peter Schiff, arguably Saylor and Bitcoin's biggest critic on X, called STRC a Ponzi scheme, adding that Saylor will someday suspend the dividend and crash STRC rather than crash Bitcoin. In a recent discussion with David Lin, Saylor, the co-founder and executive chairman of Strategy, responds to critics and carefully details his company's Bitcoin strategy, emphasizing that Strategy's real goal is not never selling, but maintaining net accumulation of Bitcoin for as long as imaginable. In his words, Strategy will be buying forever. In today's video, we bring you clips from the highly illuminating discussion as Saylor finally rephrases his never sell your Bitcoin catchphrase and extensively discusses what Strategy aims to achieve by selling Bitcoin and what impact, if any, that will have on Bitcoin prices. This is a conversation you do not want to miss. So, ensure you watch the video to the end, give this video a thumbs up, and subscribe to the channel for more insightful analysis. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000, same crypto, completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. Thanks for the support and enjoy the video.
It's probably referring to our earnings call where we announced that we're prepared to sell Bitcoin to fund our stretch dividends if need be.
I'm sure that was a very well thought through pivot. What is the idea behind it?
The most important thing is we want the market to understand that Bitcoin capital gains fund stretch credit dividends. So when we sell STRC credit, we sell $1 million of it. We turn around, we buy $1 million of Bitcoin. We expect Bitcoin to appreciate about 30% a year. It's been appreciating almost 40% a year. We strip the first 11% of that capital gain, and we pay that as a credit dividend. But there's been a bit of confusion in the market about where the dividends come from. How do we pay the dividend? And for most of the history of the instrument, we sold common equity, MSTR equity, to pay the dividend. MSTR equity is a derivative of Bitcoin. It normally trades at a premium to Bitcoin. And so we were selling a Bitcoin derivative. But some people worried that we wouldn't be able to sell the equity in the future. And then there are short narratives that we have to sell the equity. And then there are other narratives that the company won't sell its Bitcoin. And that kind of metastasized to, well, if they're not going to sell their Bitcoin, it must not have any value, and they can never sell it. And if they can't sell it, then we can't count the Bitcoin as an asset on the balance sheet. So if you had $65 billion worth of something and people wanted to value it at zero, it's not very good, right? We don't want the credit rating agencies to think the company has $0 of assets. We want the credit rating agencies to think we have $65 billion of assets. And, there are also trolls on the internet that continually complain that this is a Ponzi scheme because we sell equity in order to fund a preferred dividend. Well, what we want to do is we want to reinforce the business model is we sell credit to make a capital investment in an asset, Bitcoin, digital capital. The capital investment accretes over time faster than the dividend. We then monetize the capital gain and we pay the dividend. We think that the best way to punctuate this, to make it very clear, is to make the point that the company doesn't have to sell common stock ever. We can simply sell highly appreciated Bitcoin in order to pay a dividend. And if we do that, you're capturing a capital gain to pay a credit dividend. I think the analogy is like a real estate development company raises capital by issuing a credit instrument, buys land at $10,000 an acre, develops it, it's worth $100,000 an acre, and then they monetize that capital appreciation. You could sell the land at $100,000 an acre. You could rent the land after you fully developed it. You could refinance the land. But nobody questions a real estate development company that makes a capital investment with a credit income. What we're doing is the same thing with Bitcoin, and we want to make sure that the market understands that. I'm very famous for saying never sell your Bitcoin, and that's why the internet went crazy when we said we might sell it. But if I was being more precise, I'd say never be a net seller of Bitcoin. It just wouldn't have been so viral or so catchy to say never be a net seller of Bitcoin. I think that in these periods, even if we were to sell one Bitcoin, we'd be buying 10 to 20 more Bitcoin. So you're really talking about a situation where we buy 10 Bitcoin, sell one Bitcoin, buy 9 net Bitcoin, and continue to accrete Bitcoin. It should be a non-issue after people understand it. But right now it's a colorful area of commentary.
Is it possible for you to comment how do you sell one Bitcoin and buy 10?
Yeah. So the number one Bitcoin accretion engine is Stretch. We sold $3.2 billion of STRC in April. So we bought $3.2 billion of Bitcoin. The dividend is about 80 to 90 million. So in the month when we're raising $3 billion, we need to come up with 80 or 90 million dollars to pay the dividend. So you would be, in essence, you would be buying 30 Bitcoin, selling one Bitcoin, right? Our break-even rate is 2.3%. So what that means is that if we sell Stretch, if we issue Stretch credit equal to 2.3% of our Bitcoin holdings, then that means we will be a net buyer of Bitcoin forever, even if we sell Bitcoin to pay the dividend. Another point is that if Bitcoin appreciates 2.3% a year, we can pay the dividends forever, right? And continue to grow value, right? And we can do it without selling any common equity. So the break even is 2.3. Right now we've sold about $5 billion of STRC in the first 4 months of the year. So we're running on a pace to have an issuance rate of 15 or 20% this year. 2.3% is the break even. So you buy 20, you sell 2, you net 18, right? The company, as long as it grows, is going to buy more Bitcoin than it sells. I expect we'll be a net buyer of Bitcoin in every month and every quarter, going on forever.
What Strategy is attempting to build is effectively a Bitcoin-powered capital engine. The company raises capital through instruments like STRC, deploys that capital into Bitcoin, and then uses a relatively small portion of Bitcoin's appreciation to satisfy dividend obligations while continuing to expand its overall holdings. Saylor repeatedly emphasizes that the math only works if the company keeps buying substantially more Bitcoin than it ever sells. According to him, even during periods where Bitcoin may be sold to fund dividends, Strategy still expects to remain a large net buyer every quarter and every year. That is why Saylor reframed his famous phrase from never sell your Bitcoin to never be a net seller of Bitcoin. In practical terms, he says the company could sell one Bitcoin while acquiring 10 or 20 more through its capital strategy. To Saylor, that is not a contradiction of the Bitcoin thesis, but an extension of it. He compares the model to a real estate developer monetizing appreciated property or a tech giant investing cash into infrastructure that later generates far greater returns. The objective is not static ownership. The objective is long-term compounding. Let's get back to the video.
If we can raise liquidity by selling spot Bitcoin, that's a $20 billion spot market and a $50 billion derivative market every day. That's a powerful energy source. So we want to be able to tap that market when the equity capital markets aren't as liquid as the commodity market for Bitcoin. And so whenever a company strips its options, whenever we say we will never do something, we always regret it, whatever it is. Give you another example, right? If we say we would never ever buy our stock, we would always sell our stock, then short sellers would sell our stock and they would sell it down to $1. The stock trades at a big discount to NAV, we would buy it back. Then the short sellers have something to lose, then we would make a lot of money by them being irrational. And so what we did say in our earnings call yesterday is we're prepared to trade stretch for the common stock. We'll trade STRC for MSTR. We'll trade BTC for MSTR. We will fund our obligations with BTC or MSTR. We'll do whatever's in the best interest of the company. But, over time, we expect to be a net Bitcoin accumulator. That doesn't change. The way that we trade our assets day to day, whether we sell credit or sell equity or sell capital assets, that will be a function of the market and mispricings. And if, the other thing we said yesterday is we're ready to buy our bonds back. So our corporate bonds trade cheap. They're undervalued, and so it makes sense for us to buy them. It doesn't make sense to sell them. So we don't sell assets that are undervalued. We buy assets that are undervalued, and then we arbitrage whatever the inefficiency is. And if the market knows we're going to do that, then the market's going to actually fairly value all those assets. And that's to the benefit of all the investors and all those instruments. And ultimately, that's our fiduciary obligation. Peter thinks Bitcoin's a Ponzi scheme. Peter is not really a lover of anything in this space. Bitcoin is digital capital. And we've created a digital treasury company by selling equity and credit instruments to buy capital. I think that Bitcoin is going to continue because it represents economic wealth in tokenized form with full property rights for the world. And we have built a credit instrument, STRC, on top of it, which simply strips the volatility, reduces the risk, and extracts or distills a yield from digital capital. If you don't acknowledge Bitcoin as legitimate, you'll never acknowledge any derivative on top of it as legitimate. But for those people that believe that Bitcoin is digital capital, as a store of economic wealth in tokenized form, then what we're doing is very straightforward. We over-collateralize it, and for every $5 of Bitcoin, we sell $1 of credit, and the dollar of credit has a defined yield. And there are a lot of people that they believe Bitcoin is a legitimate asset. They just can't stand the volatility. They don't want to take money they need for their kids' tuition in the fall and invest it in Bitcoin because they need to pay a bill in 12 weeks. And so for them, digital credit makes a lot of sense because the principal is protected, it's stable, and then they're getting paid 3 or 4 times a money market. And it's the superior aspects of Bitcoin over other capital assets which allow us to pay that superior dividend yield.
In his discussion with Lin, Saylor makes it clear that Strategy wants maximum flexibility in how it manages its capital structure moving forward. If equity markets are attractive, the company may issue equity. If Bitcoin liquidity markets are stronger, the company may selectively sell Bitcoin. If bonds become undervalued, Strategy may buy them back. And if its own stock trades below what Saylor considers fair value, the company is prepared to arbitrage that inefficiency as well. His message is simple. Strategy intends to act dynamically in whatever way best increases shareholder value and expands its Bitcoin position over the long term. What stands out most is that Saylor is actively trying to turn the recent controversy into what he calls a non-issue. From his perspective, the internet reacted emotionally to the phrase selling Bitcoin without understanding the broader framework behind the strategy. Strategy currently holds more than 818,000 Bitcoin, making it the third largest known Bitcoin holder in the world, behind only Satoshi Nakamoto and Coinbase. Despite the backlash, Saylor insists the company remains committed to aggressive accumulation and expects to continue buying Bitcoin indefinitely. The bigger picture here is that Saylor still sees Bitcoin as the ultimate long-duration capital asset. Everything Strategy is doing, whether issuing preferred stock, accessing debt markets, or selectively monetizing Bitcoin appreciation, is centered around increasing Bitcoin ownership per share over time. Even after announcing the possibility of selling Bitcoin, the company still expects to remain a substantial net accumulator. That is the core point Saylor keeps returning to throughout the interview. Strategy is not exiting Bitcoin. Strategy is attempting to engineer a system that allows it to acquire more Bitcoin for decades, but the debate surrounding this strategy is far from over. Some investors see Strategy's approach as financial engineering taken to the extreme, while others believe Saylor is building the blueprint for how future Bitcoin treasury companies will operate. Either way, the conversation around Bitcoin corporate adoption has clearly entered an entirely new phase. Let us know your thoughts in the comments below. Do you agree with Saylor's explanation, or do you think the recent criticism is justified? If you enjoyed this breakdown, make sure to like the video, share it with others interested in Bitcoin and macro investing, subscribe to the channel for more in-depth analysis, and turn on notifications so you never miss an update. Thanks for watching, and we'll see you in the next video.